The global stock market rally over a vaccine for COVID-19 come to an end. Trading is calmer today as investors turn their attention to other matters. For the latest, let's speak now with our business editor, Stephen Carroll. Hi, Stephen. What exactly have we been seeing on the market?
Well, this cooling off happened during the Wall Street session yesterday. We saw investors moving away from the trends of recent days, which is where they were very pouring investment into the likes of travel stocks, but away from technology, those stay-at-home companies that have benefited so much over recent months from the boost in business due to the pandemic. So if we take a couple of examples from Wall Street yesterday, Delta Airlines down 5% at the end of the day, but Amazon and Apple up both by 3%. It had been the reverse trend that we'd seen in preceding days. Overall, that meant on Wall Street that we saw the Nasdaq index, which is where most of the world's biggest technology companies are listed, finishing the day up by 2%, but falls on the Dow Jones. In Asia today, a similar sort of trend, really. We're seeing the same cycle happening where travel shares no longer as attractive to investors today, or at least we're seeing some profits being taken out of the gains of recent days. Take the example of Cathay Pacific, the Hong Kong-based airline. Its shares down by 1.8% a short time ago in Hong Kong. Alibaba, the technology company, also trading up today in line with other technology companies, up about 1.5%, but they'd had a huge slump in their shares in trading on Wednesday, finishing the day in Hong Kong down nearly 10%, and that was over threats of new regulation from Beijing of Chinese technology companies, and particularly those digital platforms. And sort of ironic that we saw Alibaba's share price fall so much on the day of what is one of their biggest shopping days of the year, Singles Day, where the company took in $75 billion worth of sales from its Singles Day promotion since the start of November, a record-breaking figure for online retail sales, but not helping their share price in the end of the day either. The market analysts say that essentially what's happening here is that investors are moving on from their initial enthusiasm for the hopes of a coronavirus vaccine that had started at the start of this week, and are looking more detail now at issues around delivery and storage of that vaccine, which we know is going to complicate rollout, at least in the short term, when, of course, we do get a vaccine that's finally approved. So we will see investors going back to those stay-at-home stocks, perhaps giving us a hint that the rush back to normal, or whatever will resemble normal after this pandemic, might be a bit slower than we had thought earlier in the week.
And Stephen, let's turn now to Greece, which is trying to attract a new investment by offering tax discounts to remote workers who might consider moving there. What's the thinking exactly here?
Well, it's exactly what we're just talking about when it comes to the markets. Greece is trying to cash in on what they're calling digital migrants, those people who are now, because of the pandemic, no longer tied to going to an office in a city like London or New York or Paris even, and they're trying to attract those people to move to live and work in Greece instead. The plan to be published, and hopefully I think the Greek government is hoping to pass it by the end of this year, will institute a 50% discount on income tax for workers moving to Greece for a period of 7 years. Now, the programme will only be open for the year 2021, people who move there next year, and it won't be open to anyone who's been tax resident in Greece for the past 7 years. And essentially what the Greek government is saying is that if you can do your work anywhere, why not do it in Greece? And that would be a drive to help boost the Greek economy as well, whether companies or individuals will move there. But there's also a move to try and lure back some of the estimated 800,000 Greeks who left the country during its debt crisis, to try and get them to come back to Greece to live and work there now and be, part of the solution that will help the economic recovery there. They're also, of course, keeping an eye as well on Brexit, because the transition period ends at the end of December. And if people are looking to move somewhere out of the UK, perhaps they might be interested in moving to Greece as well. And this tax discount may provide a sweetener for them. Now, Greece is also leaning on its reputation of having had relatively few coronavirus cases compared to other European countries. Now, the country's economy is still expected to shrink by 9% this year. And that comes after the 25% slump that we saw during the 10-year-long debt crisis in the country as well, which still they haven't really recovered from. So this could be a drive for new investment and a new spending in the economy in Greece that might help them not only to get over the coronavirus crisis, but the much more harmful debt crisis the country's experienced over the past 10 to 15 years.
It's certainly An intriguing proposal. Stephen Carroll, thank you very much for that business update. But it's time now